Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Syahiduddin bin Mazlan.
My name is Nur Zarif Aini.
My name is Muhammad Akif bin Muhammad Azmi.
My name is Nur Atira binti Aziz.
My name is Nur Natasha Nadia binti Mahdi.
My name is Tuan Fatin Zulaikha binti Tuan Muhammad Rukimai.
Our group will be talking about derivative market. So we start with Ishaduddin bin Mazlan.
So for today, I'm going to presenting about the introduction of derivative and the introduction about FCPO, which is future crude palm oil. Firstly, let's start with the introduction of derivative. Derivative is a type of financial contract, and it happens when the two parties come together to determine the asset's base value and they agree on terms about the assets and its value. Derivative derive their value from the actions of the underlying assets rather than a simple exchange of assets or money. For example, a soybean future contract does not require the purchase or sale of soybeans. Instead, the expenses of purchasing and selling soybeans determines the value. Definition of derivative according to Bursa Malaysia Berhad is the use of financial instruments used to manage a person's exposure to current market fluctuations. The value of derivative product is used and derived from the underlying instruments such as commodities, interest rates, indices, and stocks. All derivative products in Malaysia are regulated and traded on Bursa Malaysia Derivative Berhad, a subsidiary of Bursa Malaysia Berhad (BMD). And now, what is derivative market? Derivative market is a financial market for derivative, which are financial instruments that obtain from other securities, such as contracts or future options. The market can be divided into two categories, which is exchange-traded derivative and derivative sold separately. Although many market players are active in both, the legitimate nature of this product as well as the way they are traded are very different. Based on Garbett and Silber 1983, the aim of derivative market, whether Sharia compliant or not, is to serve as an effective price discovery mechanism and to manage price fluctuations in financial assets. So let's move to the introduction of future crude palm oil or FCPO. Malaysia's palm oil industry is the country's economic pillar and it continues to face new threats as a result of globalization and a series of financial crises. Palm oil currently occupies the largest amount of farmland in both Malaysia and Indonesia. Malaysia is one of the world's largest producers and exporters of palm oil, accounting for 39% of global production and 44% of oil and fats exported. The first world crude palm oil futures were introduced in October 1980 and have since become Malaysia's most common and active commodity futures contract. The derivative industry has undergone a number of fundamental changes since its inception. The Kuala Lumpur Commodity Exchange (KLCE) used to trade in FCPO. However, in November 1998, it merged with the Malaysian Monetary Exchange and was renamed the Commodity and Monetary Market Exchange. The open outcry since was used to trade futures contract at the time. However, the 1997 financial crisis prompted a significant restructuring of the Malaysian capital market and many derivative markets were forced to combine into one, known as Bursa Derivative Malaysia Berhad (BDMB). FCPO futures switched to an electronic trading system in December 2001. And in September 2008, a US-denominated palm oil futures (FUPO) contract was launched to supplement the existing FCPO contract. And this newly launched future contract, however, have not performed as well as the FCPO futures contract. FCPO is widely regarded as the global pricing benchmark for crude palm oil and is the most actively traded CPO futures contract in Malaysia. In addition, the Palm Oil Trading Group considers FCPO to be the most price sensitive. To promote further traders and stimulate the market, Bursa Malaysia Derivative expanded trading hours and the contract length of FCPO to increase market liquidity and trading volume. As a result, traders will try to learn more about this market when looking for another investment option. I think that's all for me. Thank you.
I will be continue about the methodology of our research. This research paper is a table that study based on the secondary information, basically through research on secondary data. Some of them were such as various articles, journals, websites, and more. This study is a study that refers to secondary sources such as official websites, mobile applications in capturing information, and data to generate the latest ideas and views on published topics in Malaysia. The study also refers to the largest stock exchange in Malaysia, which analyzes comparative data and statistics, and to get a clearer perspective on this matter, in person is often taken informally.
I will continue with the first point, future contract work. There are two parties to every future contract. The seller of the contract who agree to deliver the asset at the specific time in the future, and the buyer of the contract who agree to pay a fixed price and take delivery of the asset. While a future contract may be used by a buyer or seller to hedge other position in the same asset, price change in the asset after the future contract agreement is made provide again to one party at the expense of the other. If the price of the underlying asset increase after the agreement is made, the buyer at the expense of the seller. If the price of the asset drop, the seller gains at the expense of the buyer. After that, I will present about advantage and disadvantage. Firstly, the advantage is future are great to trading certain investment. Future may not be the best way to trade stock, for instance, but they are great way to trade specific investment such as commodities, currency, and index. Their standards, feature, and very high level of leverage make them particularly useful for the risk-tolerant retail investor. The high leverage allow those investors to participate in market to which they might not have had access otherwise. Secondly is fixed upfront trading costs. The margin requirement, the major commodity and currency feature are well known because they have been relatively unchanged for years. Margin requirement may be temporarily rise when an asset is particularly volatile, but in most cases, they are unchanged from one year to the next. This means a trader knows in advance how much has to be put up in essential margin. Lastly is no time decay. This is substantial advantage of future over option. Options are wasting asset, which means the value decline over time, a phenomenon known as time decay. A number of factors influence the time decay of an option, one of the most important being time to expiration. An option trader has to pay attention to time decay because it can severely erode the profitability, but futures on the other hand do not have to contend with time decay. And my last part is a disadvantage. Firstly, timing issue. Future contract come with definite expiration date. If you have established fixed price for the asset in the contract as the expiration date, approach those price can become much less attractive to others. At times, this condition can cause future contract to expire as worthless investment. Future contract expiration date as they get closer come with similar risks. And lastly is a speculative feature. Derivatives are instruments which are used for speculation purpose for earning profit. Sometimes, huge loss may occur due to unreasonable speculation as derivatives are of unpredictable and high-risk nature.
My name is Mohammed Shahiduddin bin Mazlan, and I will continue about the analysis of risk. So Malaysia is well known for being one of the world's top crude palm oil exporters. As a result, the palm oil industry is a significant contributor to Malaysia's economic development. And Malaysia is currently the world's second largest producer of palm oil, behind only Indonesia. Despite its benefits to the Malaysian economy, there are risks and uncertainties arising from instability of crude palm oil prices. So, what are the factors that cause risk in this palm oil sector? First, financing risk. Financing risk is the risk of not having enough money. And financing risk often comes from project developers' failure to fulfill debt obligations such as interest payments. And it usually happens especially during the project's initial construction and during operating years. This risk caused by a lack of bankability due to new and unproven technologies, unavailable credit, and also operational track records. Second factor is technology risk. Technology risk refers to the confusion surrounding the application and success of currently in use technologies. It occurs when a technology fails to function or perform as effectively and efficiently as intended. Besides, poor technological decisions will derail or ruin a promising clean tech project. This risk also because the technology grows, introduction and implementation that are still moving at a snail's rate. The third factor is business risk. In broad terms, business risk is the risk inherent in a firm and a market to which the firm belongs. The instability of operating income typically reflects business risk. The greater the income fluctuations, then the greater the market risk and vice versa. A variety of factors that affect this risk including market volume, purchase price, input costs, competitiveness, general economic conditions, and also government policies. So, how to overcome all of these risks? First, the company needs to manage their price forecast. And to improve forecasting, the company must include several terms of an analysis, include their market, customer behavior, company objectives, and contract terms and conditions. These techniques allow them to estimate the impact of change on actual price, volume, and mix. Second one, the company need to survey marketplace and environment. In today's business environment, sustaining growth and profitability is never been a guarantee anymore. Hence, they must define a framework to help search for opportunities. The important thing they must do is analyze consumer segmentation, purchase situation, direct and indirect competition, and they can also analyze foreign markets for their company. And the last one, the company need to provide safety for their workers in the sector. They need to make sure they are in perfect conditions before doing their work. The company also can help a safety awareness program to the workers and also encouraging them to take insurance contracts so they can claim the compensation if something happens to them while they are working.
My name is Muhammad Akif, so I will continue to the next part, which is analysis of performance. I will start with the overview of industry on 2016 and 2019. On 2016, prolonged dry weather condition and below average rainfall brought about by the El Nino weather phenomena during the second half of 2015 and into the first half of 2016 had impacted Malaysian oil palm industry performance in 2016. The year 2016 saw crude palm oil CPO production decline by double digit, which drew down palm oil stock and pushed up palm oil price. High palm oil price had influenced export to major market as the discount of CPO to soybean oil narrowed. Average CPO's price in 2016 was higher by 23.2% to reach about RM 2,653 per ton. So the higher palm oil price also helped to increase the export revenue by 7.3% on that year. So the crude palm oil on 2016 are not much better because of the El Nino performance, and that's for the 2016. So on 2017, the Malaysian oil palm industry shows trailing performance in 2017. crude palm oil production yet witnessed significant increase following recovery from the impact of the El Nino phenomena a year earlier. According to the Department of Statistics Malaysia higher palm oil price and improved export demand helped push the export earning of 2017. Okay, on 2017 also showed that the crude palm oil price has reached RM 3,258 per ton. So that was a good performance of 2017 because Malaysia was recovering from the El Nino phenomena. Okay. On 2018, the Malaysian oil palm industry faced a challenging performance in 2018. As compared to the achievement in 2017, crude palm oil CPO production, export of palm oil, CPO price, and total palm oil export earning declined, while that of import and closing palm oil stock show a significant increase. On 2019, the Malaysian oil palm industry has shown a better performance as compared from 2018. Improvement witnessed in key performance indicator, namely crude palm oil production, export, and palm oil stock. Overall, CPO production, export, and imports of palm oil increased, while palm oil stock, CPO price, and total export earnings of oil palm products declined. The decline of the oil palm product due to some reason of challenging that Malaysia facing on 2008.
Next, the suggestion for derivatives have three. First, understand how derivatives work. It is often said that knowledge is power. To add of it, knowledge is money too. Trading in derivatives offers great potential for investors to make money. But this is possible only if we are equipped with sound knowledge of how the market functions. Also, be updated with market events. For example, if you are interested in futures trading in the commodity segment, you should keep track of how the prices of oil and other commodities are changing in international markets. Second, create a trading plan. Once you identify a category, you need to do some research to get a better idea about the market. If you already have knowledge about a particular sector, you can start there. We need to create a trading plan to guide us along on our investment journey. Make a list of contracts, time periods, and investment goals in a journal. It is quite common for investors to make investment decisions based on emotions once their money is on the line. Instead, what you need is rational thinking. And for this, a trading plan is important. And the last suggestion is set up stop loss and profit targets. When trading in derivatives, it is always recommended to create a stop loss and profit target. The market can be unpredictable. For example, stock prices may be rising for a certain period of time, but all of a sudden, the prices could drop without warning due to some macroeconomic effect. That's why, even when we are doing well in the market, it is better to create a profit target and exit when we reach the target. Similarly, when the market moves in the opposite direction, good traders identify when to exit the trade and accept losses. By staying in the trade and waiting, we only risk losing a larger sum of money as time passes.
For the conclusion, derivatives are like options or futures where they can be used as a way to hedge. Before making any decision to invest, we have to make sure that we really understand the investment instruments and the risk involved in the investment. Compared to Forex, derivatives is a safe investment and there is no elements of fraud because it is controlled by the Malaysian Stock Exchange. Investors can make money and profit from future crude palm oil or FCPO no matter whether the market is down or declining. To start trading in FCPO, investors do not need high capital compared to stocks. This palm oil futures market provides an advantage in terms of trading opportunities regardless of the market going up or down. And of course, Sharia compliance is a must in every investment that we make. That's all from us. Thank you.